You're watching news headlines on mining.com. I'm David Murrigan. Rio Tinto is weighing a deeper move into rare earths and critical minerals as global trade tensions and the energy transition reshape the market. CEO Jacob Stolzholm told shareholders in Perth the company is already producing scandium and may add gallium, but will only expand if demand is clear. Now, Chairman Dominic Barton said while critical minerals are small in scale, they could boost Rio's social license and supply chain resilience. Rio says it can manage under current global tariffs and is optimistic about progress on its copper projects in the United States and Simandou in West Africa. Shareholder pushes to review the company's structure were voted down with just 19% support. The United States and the Ukraine have signed a long-awaited minerals deal, giving Washington priority access to key resource projects in exchange for economic support. The agreement includes a U.S.-managed reconstruction fund that will channel profits into Ukraine's recovery without requiring repayment of past military aid. U.S. President Donald Trump called it a secure deal for America, saying it would help deter bad actors and support a peace process with Russia. Kyiv says the deal boosts its goal of joining the European Union while protecting its sovereignty. Seabed mining firm The Metals Company has applied for a U.S. license to mine a mineral-rich area of the Pacific Ocean, setting up a potential clash with international regulators. The Canadian-based firm wants to mine part of the Clarion-Clipperton Zone, a deep-sea region between Hawaii and Mexico, home to billions of metal-rich nodules vital for green technologies. Now, the Trump administration recently signed an executive order to fast-track such applications under a 1980 U.S. law. But the zone is also governed by the UN-linked International Seabed Authority, which has yet to finalize mining rules. The Metals Company already holds 2 exploration licenses backed by Nauru and Tonga and says it expects U.S. review of its application within 60 days. Glencore reported a 30% plunge in copper production for the first quarter, sending its U.S. trade shares down more than 8% earlier this week. The Swiss miner produced just under 168,000 tons of copper, citing lower grades and weaker output at key sites in Chile and the DRC. Despite the miss, Glencore is sticking to its full-year forecast, even though the high end would fall short of the 2024 levels. Cobalt output jumped 44%, while nickel dropped 21%. Now, Glencore's market value has now fallen to under $40 billion, less than half of its 2022 peak. The European Union is backing the Czech Republic's Sinovac lithium project with a $36 million grant, part of the bloc's push to secure homegrown critical minerals. European Metals Holdings says the money will help fast-track development and boost output, pending environmental approval later this year. Sinovac is the European Union's largest hard rock lithium resource and was recently designated a strategic project under Europe's new Critical Raw Minerals Act. A full feasibility study is due by late 2025, with construction permits possible within 2 years. The lithium is key to Europe's electric vehicle ambitions and energy transition plans. That's where we leave your mining news headlines for now. Bye-bye.